WeeklyPay ETFs have exploded in 2025 from HOOW to QDTE to ULTY. But there is a new kid on the block that's turning heads. It's called WPAY, the Roundhill WeeklyPay Universe ETF, and it claims to pay you every single week while diversifying across the hottest single stock income ETFs on the market. Sounds great, right? But does it actually work? And is this something income investors like us should trust? Stick around to the end because I'll tell you whether I'm adding WPAY to my portfolio and how much I plan to start with if I do. All right, let's get into it. Welcome back everyone. Rico here. If you've been wondering about WPAY, we're doing a full overview while trying to determine if this should be added to any income investor's portfolio. But as always, before we jump in, this video is for educational and inspirational purposes only. I am not a financial advisor. Specifically, I'm not your financial advisor, and this is not financial advice. Always do your own research before investing. Okay, let's start to break down what WPAY actually is and what might make it different than those other weekly payers that I talked about earlier. So let's grab this data from Snowball Analytics. If you want a trial and discount, click on the affiliate link below. Okay, so this is the Roundhill WeeklyPay Universe ETF, ticker WPAY, and it launched only in September 4th of this year, 2025. And the current price is $53.08 as of the data's recording, and total return since launch is about 10%. And the current dividend yield, if you were to annualize it, is about 71.85%, and they're planning on paying about $38 for this year. And the next ex-dividend date just passed, actually. It's today, October 21st. That's the day I'm recording. And it has an expense ratio of 0.99%. Now, this fund tracks something called the Solactive Roundhill WeeklyPay Universe Index. So let's talk about what that is. So Solactive is a global index provider based in Germany, and they build custom indexes that many ETFs like to follow. So in this case, they created one that includes every single Roundhill WeeklyPay ETF, like AAPL, the WeeklyPay, HHOD WeeklyPay, NVIDIA WeeklyPay, Tesla WeeklyPay, etc. So here's all listed out, all the Roundhill single stock ETFs that are actually in this fund. So what this fund essentially does, it's a basket of Roundhill's own ETFs. It's rebalanced monthly to equal weight each one, giving you exposure across all of their single stock income plays without having to necessarily pick your favorites because it's just evenly distributed. So let's talk a little bit about the strategy and the objective that Roundhill's using with this. So this is kind of what makes it unique. So each WeeklyPay ETF aims to deliver 1.2 times or 120% the weekly total return of its underlying stock. So for example, HOOW tries to return 1.2 times the weekly move of Robinhood. And they do this through total return swaps and option overlays. Basically, it's complex derivative contracts that boost exposure and generate income. So they do this for every individual stock in this portfolio, that Roundhill portfolio. So WPAY, in turn, it invests in that whole universe. So all of those single funds. It's like a fund of funds that bundles all the single stock strategies and pays investors every week. And yes, WPAY makes weekly distributions, but since launch, those have ranged. Originally, it was around 54 cents, and they've gone upwards of 80 cents per share. So that means the yield has been high, but it hasn't necessarily been consistent. But also keep in mind, there's only been about 4 payouts, right? So we need a little bit more time to see how consistent it can be. So let's talk about how WPAY compares to others. So since launch, WPAY is up roughly, 10.8, 11.8%. And that's actually outperforming QDTE, which is up 6%, and ULTY, which is up 4%. And keep in mind, this is adjusted, so with dividends reinvested. But look at where it stands against HOOW, which has skyrocketed. It's a stellar year for HOOW. That's nearly 38% this year. So that makes sense though, because HOOW rides directly on Robinhood's massive 2025 rally, while WPAY spreads that exposure across multiple names. One of them is Robinhood, but it's across more. So in short, just to give you a quick summary, like WPAY, it's balanced exposure across all Roundhill's weekly pays. HOOW, pure volatility, but also pure yield from Robinhood. QDTE is the zero DT option against the NASDAQ 100. So you're betting against tech essentially. And then ULTY is ultra leveraged income play with lots of risks of erosion. So I'd call WPAY a middle ground, less explosive than HOOW, but potentially more stable than ULTY or QDTE. But since this fund is so young, only time will really tell. So let's do a quick run of what a $10,000 income test would look like, just to visualize what kind of cash flow this fund could generate if you bought it today. So as always, lump sum investment, $10,000 in WPAY. At today's yield of 71.85%, that's about $138 a week in income, or roughly $7,100 a year if you just took the income and took the cash. But if you invested those weekly payouts, your $10,000 could grow to about $20,400 after just a year. And that's assuming a few things, that the price stays flat and then the payout's stable, but we all know that's probably best case scenario. But this can show you how powerful this high yield player, weekly payer, can be if it is sustainable. What do you think? What would you do? Take the cash every week, or would you reinvest it for compounding? Drop a comment down below. I love seeing how everyone approaches these kinds of income plays. If you've been watching my channel for a while, I do a mix of both, right? I'll take the income and then reinvest some of that income into the fund. Now, before we get too excited about those potential returns, let's talk about risk, because there's definitely some risk here. And I like to compare every income play against a baseline. So for example, let's take VOO, which is Vanguard's S&P 500 ETF, and then SPYI, which is Neos's S&P 500, which is one of my favorite covered call ETFs. So on the risk meter, VOO sits around 2 out of 10 on my risk scale. Rock solid, steady growth. It's not for income, but definitely a strong play for growth and for diversification. SPYI, which uses covered calls, is more around a 4 or 5 out of 10. A bit more volatile, but still dependable because it's spread across the S&P 500. WPAY, easily 8 out of 10 on the risk meter. It's brand new. It's heavily leveraged through total return swaps, and it depends entirely on Roundhill's single stock ETFs performing well. If those don't do well, WPAY won't do well. So while that 70% yield looks amazing, you've got to respect the risk that comes with it. Now, let's talk about some pros and cons. So some of the things that WPAY has going for itself. Weekly payouts. So recurring income for income investors, income you can depend on. I don't know if the distribution amounts you can depend on, but you can depend on getting paid weekly. So that's easy to schedule your life around weekly payments. You get strong diversification across Roundhill single stock WeeklyPay ETFs, which can be good, also can be bad. You can have potentially smoother performance than betting on just a single stock. So if HOOW tanks, or if Robinhood tanks, HOOW tanks also. And then finally, it's passive management for you, and it's a transparent holding because Roundhill handles all the transactions and you can see exactly what they're holding. Okay, so some of the cons: circular exposure. So WPAY only holds Roundhill's own ETFs, so its success depends on the performance. So like I said, in the pros, yeah, it's single stocks, but the con is Roundhill, it's only dependent on Roundhill. Next con is the short track record. It just launched in September, so we don't know how it handles a drawdown, what it's going to be like in the long term. We have such a short window to look into. And then it has a relatively high expense ratio, 0.99% net after a waiver and some of the things like that. Can be pretty steep for a fund of funds, but it is pretty much in line with a lot of these newer covered call ETF type funds. And we talked about it earlier, the inconsistent distribution so far. The weekly payout hasn't settled into a rhythm yet. You can see like even QDTE, even though the distribution is not high, it's consistent. Same thing with ULTY. It's around 8 to 10 cents. So predictable. This is not predictable yet. Like always, we need to talk about who WPAY might be for and maybe who it's not for. So if you're an income investor looking for a consistent weekly cash flow, this could be a great fund. If you want exposure to multiple single stock covered ETFs in one fund, could also be one. Also keep in mind it's just for Roundhill. If you are a huge fan of Roundhill's weekly pay lineup and you don't want to pick individual winners, this could be an easier way to do it. And if you understand the risks of leverage and return of capital payouts that always come with these covered call weekly payers, then this could be something good to add to your portfolio. But, and this is a huge but, WPAY may not be for you if you're a long-term buy and hold investor seeking steady NAV growth, or you're just a growth investor in general. If you don't like complex strategies involving swaps and derivatives, you might want to stay away. If you need something more predictable in terms of distributions or lower expenses, you might want to stay away. And if you already own many of Roundhill's weekly pay ETFs individually, that might seem like a good idea to double dip, but also you're doubly exposed if it goes down. So definitely keep these pros and cons in mind when you're looking at WPAY for your own portfolio. So for me, I'm keeping an eye on it for sure. I love the idea of diversified weekly income, but 1 month of data isn't enough to make a strong decision. I'm likely going to start with a $1,000 test position and see how that dividend flows and how the NAV behaves. And I'll definitely report back at the end of the year, which is coming up pretty soon. So I'll give a quarterly review on how that $1,000 performs. But to be honest, this is a fascinating concept. I think YieldMax is coming out with their own version. But if Roundhill can prove these weekly pays can work together in the long term, WPAY could be a core income play for a lot of people, including myself. What do you think? Would you rather own WPAY for diversification, or would you want to hold single high flyers like HOOW? Drop your thoughts down below, or even QDTE. So that could be something that you might want to go into instead of WPAY. Totally up to you. So that's it. To wrap this up, in the end, WPAY, it's a fascinating experiment in weekly income and diversified volatility. It's not a guaranteed path to freedom though, but it could be another tool in your tool belt for those of us building passive income streams that pay us every single week. I'm definitely keeping my eye on it. Again, like I said, I'll update you on how my small position goes. And as always, thank you all for watching. If you got value from this video, please give it a thumbs up and subscribe if you haven't already. I appreciate each and every one of you. If it doesn't challenge you, it doesn't change you. Messy action's better than no action. Take care, and I'll see you next time. Boom.